time again, Frankfurt. So are you here more often recently?
Not really.
Not really. So no meetings around Commerzbank Tower?
Not beyond what we do regularly every quarter.
Okay. So yesterday we opened this conference with a long conversation with Christian Sewing. We talked about German politics and about economy and what kind of reforms have to be done. So I would like to broaden the perspective a little bit now and talk about Europe. So over the past few months, we've seen quite a bit of optimism when it comes to Europe. But at the other hand side, Europe keeps falling behind when it comes to capital markets, when it comes to technology. So where are you at, on the optimistic side or on the pessimistic one?
I think that if you judge from the past, you should be pessimistic. I mean, if you look at the last 15 years, we started with Europe having a GDP 10% greater than the US. Today, the US have a GDP 50% greater than us. We started with the same GDP per capita. Today, we are half the US. So this is a massive destruction of value and wealth for all the European citizens in every country. If you look at the infrastructure, what I would call the infrastructure, every technology, AI, data, everything that you talk into this area is first and foremost the US, then a little bit further down, China, we're nowhere. If you look at banks, on average, they are 3 times our size for an economy that at the end of the day is similar. And if you look at capital markets, they're more than 300 times our size. So if you look at that, we've lost the train. But if you look at potential, I think Europe has a great potential. So if you look at talent, even Germany is in 3rd place for Nobel laureate. Italy has 21. We have an educational system that is very strong. We have 25 universities in the top 100s. Usually Europeans are more educated than the rest of the economic blocs. So there is, and if you look about savings, it is true that the US has about 16 trillion in savings, and we have only 13 trillion. But in our case, more than 40% are in cash, in banks, rather than being invested, while in the US it's only 16. So if you unleash all of that, there is absolutely no reason why Europe should not punch at the same level of the US. What are the barriers? The barriers that we need to want to do it.
We have to talk about it, but I still didn't understand, are you on the optimistic or on the pessimistic side?
I think, look, being at Unicredit and being a federal group of 13 banks in 13 European countries, I have to be optimistic. So I am optimistic about Europe.
So you've been really pushing for banking consolidation in recent months, but you've faced quite a lot of pushback. What have you learned from that?
Well, I think banking consolidation is something that if you ask anyone, they will all agree that we need bigger, stronger banks to support the economy.
That's why I'm asking, because all the politicians call for banking union all the time.
When it becomes personal, everybody keeps on saying, yeah, we really need stronger bank, we really need consolidation, but not here. I don't think this is necessarily because we're talking about banking union. This is well before banking union, because all the deals that are derailed or stopped at the moment are not cross-border deals. They are domestic deals. So even within country, there is a fragmentation of views, political views, on which transactions are good and which transactions are not good. And I think that what we have learned, not only I, but I think other CEOs that are in the middle of transactions, is that I think that post-COVID, governments and politics have become a lot more interventionist, I would say protectionist, into the banking sector. And while it is absolutely fair that government are worried and need to ensure what's best for their economy.
It's a very interesting point. I would like to stress on that. In a recent interview, you said that European governments are deliberately trying to prevent further integration of European banking market. How do you explain this resistance?
I think there is a lot of preconceived ideas on what it is, and you really need to go into the details. So there is preconceived ideas that in the Europe of today, banks from different countries will move savings across the borders, will invest in different places, will take decision in the interest of the original economy and not in others. And these are factually incorrect, because actually, because of how the banking union is structured and the European Union is structured, for example, if I look at HVB, I'm the chairman of HVB Supervisory Board, I cannot take a decision that is not in the best interest of the bank, because if I did, I would breach regulation and breach legal. So if you look at movement of liquidity, Germany does not allow you to move liquidity from Germany into the other countries. So there is no movement of liquidity. So I do think there is a lot of preconceived ideas on both risk and what would happen to the economy. And I think these preconceived ideas are barring having stronger bank and stronger capital markets that will support the transformation. I think a very important point that we always miss is we all talk about industrial transformation and how we need to be stronger in Europe. But to do that, that's the engine. But to do that, you need gasoline. Gasoline is banks and capital market. If we have weak banks and weak capital markets, we are not going to be able to finance the transformation of the country.
But critics say, on the other side, the timing for consolidation is not right. The banking union has to come first. How do you answer to that?
I don't think so. If we had accepted the idea that without banking union, we cannot operate. I remind you, we have 13 banks, 13 legal entities from Italy to Germany to Austria to all the CEE. We would not exist. Instead, not only we exist, but we are the most operationally efficient bank in Europe, the most capital efficient, the lower risk, the most profitable at 20% return on equity. So without banking union, with all of these barriers, we can do it. That's the first point. The second point is when we do M&A for the time being, we're doing by being a local. So when we do M&A in Romania, we had the fourth bank, we're now the third bank. It's not a cross-border deal, it's a deal between two Romanian banks. When we do a deal in Italy, it's the same. When we do a deal in Germany, it's the same. So as long as we don't buy a bank in another country of Europe where we're not, for us, it's a series of domestic deals, so nothing changes really. It is an in-market consolidation. Political views are another things, but in terms of technically, we're merging two German banks, two Italian banks, two Romanian banks, two Austrian banks. So I don't think that banking union has anything to do with it.
Do you think banking union will ever come? I mean, how long are we talking about it?
I think that there is currently a very big debate, and if you want to, my optimism of Europe, with what is happening now in M&A, there is really a very strong, I would call dialogue, challenge, call it whatever you want to call it, between European Union institution and single governments on exactly that topic. And the European Union is quite decisive and proactive in saying, hey, we have agreed to do this together. Why are these things happening? So I want to be very positive on the fact that because of that dialogue, eventually people are going to look into the facts and the reality, and it will happen.
Okay, but this eventually could take another 10 years.
It could. But for us, it doesn't change anything. I think the question for us is, we have a bank that is going to, that has multiplied its share price by 9 times, multiplied its profitability by about 9 times, and that in the next 3 years expects to increase its core earnings by another 30%. So this is without banking union. And these indicators are at the top of the banking industry. If banking union comes, there is a lot more, because I eliminate a lot of the barriers that exist today, and I can run it more efficiently. But if it doesn't come, we'll still do that. And I think our motto at Unicredit is, if you start looking at all the barriers that they are and say it can't be done, you won't. And therefore, we continue to say it's never impossible, you just need to find a way.
Let's quickly talk about the pushback in consolidation you face again. What mistakes did you or have you made along the way? What did you learn for the future?
I think in consolidation, I think what we learned for the future is that you need to take in great consideration politics in doing M&A in banking at the moment. And this is not specific to any country. It is specific to every country.
Okay, but especially in Germany.
Well, I wouldn't say so for now, because that, if I may, we are just an investor at the moment. I think governments and politicians have an opinion and they're entitled to it, but we haven't done anything more. So we haven't learned anything more here. In Italy, we have learned something more. In Spain, my colleagues have learned something more. In Portugal, in Poland, in Romania, they're learning something more. I think that, I'll give you one idea. When I used to do M&A for a living, beginning of the 2000s still, it would take for an offer about 120 days to be closed, and there was almost no government involvement. Today, that average has moved to 300 days, which means banks who do M&A needs to be in the soup for 300 days, waiting for views that are not linked to numbers, but are linked to political views. And that is difficult, and you need to incorporate it now in whatever you do.
Let's turn to the topic everyone here is waiting for, Commerzbank. Yesterday, we asked the audience here, will Unicredit buy Commerzbank eventually? 78% answered yes. So if you would be answered in this poll, what would be your answer?
Well, my answer would be, it is a question for shareholders to determine. And it is a question that, and we forget that, and when I say we, I think management teams and boards. We are here to do the best for our organization. We have a fiduciary duty to do the best for our organization, and that, what does it mean in specific? It means we have shareholders who have put their money on it, and we owe it to them. We have employees who have their career in it, and we owe it to them. And we have clients who expect to get things. So in my opinion, if there is no external blockage like we had in Italy, it will be determined by how these constituencies, shareholder first and the other two, will determine what is best.
So what is your plan for the coming months?
For the time being, we are exactly where we said we would be when we moved through derivatives to 30%, which was last year. We have obtained all the authorization, regulatory, legal, antitrust, German antitrust, you name it. We now can convert, and we are gradually converting as we are unwinding the position, what we have. I don't think there is any change. We will be around 30% by the end of the year. We now equity consolidate Commerzbank. We're very comfortable with that situation because our average cost of investment is much, much lower than the market. The return on investment for our shareholder is about 20%, much higher than anything else that I can find out there. So for the time being, for as long as Commerzbank does well, continues to evolve and transform, their win is our win, and we're happy to sit here.
I don't want to dig into history too deep, but it was just one question. So 1 year ago, the German government said it wants to keep Commerzbank independent and not to sell further shares to you. Why did you nevertheless increase your shares in Commerzbank?
Just because 4 days before they had sold us 5% in a transparent auction representing the opposite position. Otherwise, we would not be here today.
So is it an option to move ahead with a takeover even against the government's will? I mean, legally, you would have all the necessary approvals, right? So is that an option? Yes or no?
So I think first of all, let's be very clear. Since the day we bought that famous 5% from the German government, we have had, from that day onward, no discussions with respect to merger, combination, or other things that go beyond an investment between us and Commerzbank. We had discussion before, or we would not be here today, but we did not have discussion afterwards.
What kind of discussion did you have before?
We had discussion over a long time. The two banks have been talking for a long time. Sometimes Commerzbank wanted to do something sometimes it was the opposite.
Okay, no discussion since then, but still, let's stick to this answer. Would that be an option to go ahead without government approval?
The point is, at this point in time, as I answered before, you need to factor in government and politics into any combination in banking in Europe, domestic, in cross-border or other. It is a critical factor. It's not the only factor. Us doing more will be dependent on a number of things. The position of the government will be a critical factor in it.
So it's a no, you wouldn't proceed without green light from Berlin?
I'm just saying it's a critical factor. Ultimately, all of us management team are accountable to our shareholders, people, and clients, not to governments. But we respect their position and we need to incorporate it.
How do you think of the signals you've been getting from the German government so far? Has that changed with the new government?
I think the signals at the end of the day are, at the moment, I would say, everybody speculate what's next.
Exactly.
And I keep on getting a lot of speculation on what the takeover will look like, whether the plan exists or doesn't exist. Given that there's no conversation, nobody knows exactly what the plan is. That does not mean that it doesn't exist, because we have one. So this is speculation about headquarters, speculation about difficulty of integration, speculation about investment, about cost cuts, about where the decision is going to be made, what it's going to look like. Well, if you want to eliminate the speculation, we are here. We're very, very happy to have a constructive dialogue with anybody who wants to have it. So far, we have failed to have that dialogue. So
at least we want to have this dialogue. Let's quickly go back to the government. Did they actually reply to your letters?
They were very kind to reply and taking note of a letter that we sent, but as they should, they asked us to engage directly with Commerzbank.
So what is the concrete vision for Commerzbank you're trying to convince the German government and the Commerzbank management with?
Again, firstly, I'm not trying to convince anybody because I'm not having a dialogue with anybody. And no one has wanted to sit down and review what it could look like. I would say the following, however. Germany has a very fragmented banking sector. Germany, if you compare it to any other country in Europe. If you look at ability to service your client, that is an issue. It's an issue on investment in IT, which is subpar. It is an issue in products that you can distribute. It is an issue of your ability to compete. Actually, the segment of banks that are gaining the most market share in Germany are American, because they have critical mass, they have products, and they're attacking the best economy in Europe through that, because it's very advantageous from them. I don't think Europeans have enough critical mass to counter that. So, why HVB and Commerzbank? Because these are what we call revenue-led merger. HVB is in Bavaria, south of the country, a little bit in Hamburg. Commerzbank is at the center. HVB is very strong on large corporate and mid, not much in retail. Commerzbank is very strong in mid, so Mittelstand and small, and a lot in mass market. So segment-wise of clients, and geographically, there is very limited overlap, which is not true, for example, of Commerzbank vis-à-vis other German banks. Therefore, and given our philosophy, this would be a merger where we would try to capture a lot more share of revenues, not drive it through cost cuts. And and for Germany, what does it do? I have read many places, but choice of clients. The largest or the greatest market share that this combination would have would be in the Mittelstand, 12 to 13%. Okay, that same market share in Spain is 25. In Italy is 20. So if you have 12 to 13%, it means you have 7 or 8 choices every time you go and ask for a product. So and this does not include the Americans. So I don't think there is a question of choice. There is a question of investment. Banks, and this is demonstrated, need scale because technological and AI investment requires billions, and we are behind. In order to do it, you need greater scale, or you can't afford it. If you look at the smaller banks and you look at their technology investment, it's all maintenance. We call it run. Nobody does change. Why don't they do change? Because if they did change, their results will plummet. You need size to do that. That's something that we bring. Integration. I heard a lot of discussion about integration. Oh, but technology cannot be integrated. We just finished the integration in Romania. 2 different banks, 2 different systems, 9 months, and we're on one system. Unicredit has executed 353 acquisitions and integrated them on one platform. So the fact that it wasn't successful in other places does not mean it's not successful for everybody. And then I could say the benefits that, for example, now Greece is looking at us. Because the moment you're part of a larger group, you no longer have a limit on your concentration because you apply to the entire group, not to the whole bank. The firing power, the additional firing power we would have in Germany would be 20 to 30 billion. It's a lot in terms of equity geared up. So for the transformation of Germany, it's very good. So then you leave the politics and everything else, but honestly, I've heard a lot of things on headquarters, etc.
Yeah, exactly. So where would the headquarters be?
Well, every time we go in a country, we determine with the government of that country where is best for that headquarters. We can have a preference, but in terms of what we will do is what the 2 banks feel will put them in a strategic advantage and what the local institution, therefore the government, will tell us that they want it to be. This is not for us. We're very neutral about that.
You didn't really talk about jobs now. The unions fear that there would be thousands of jobs cut in back office.
So the point on jobs, I would say the following. First of all, when you do a merger, what you're trying to do is add synergies and efficiencies for your shareholders. And most of the time, and I have to admit, especially in Germany,
yes,
costs have been the driver. The first thing to say is that because of the complementarity of the 2 institutions, for us, is more about revenue, which means we would not touch the network, which means we would enhance the network and we will invest in the network. So all of that piece would remain practically untouched, if not boosted, because what we want is to gain share, not lose it. Then you leave the rest. The rest, there are 2 things to be said. The first thing is we need to invest in IT. And it's not Unicredit determining. When all us banks compete with N26, with Revolut, when my daughter comes and sees me and says, wow, the experience on Revolut is so great, one should ask how, with 15 years old, she can have a card there, but that's another story. What do they have? Technology, client journey, and an efficiency that is greater than banks. So, like it or not, all of us will need to gain that efficiency.
Sure, but how many jobs will be cut?
I think there will be, at headquarters, a significant number, but a lot less than the numbers that have gone around. And before giving you a number, we would need to sit down with them and look. But I would say another thing, and I will take a bet on that. If you will see Commerzbank stand alone in 5 years, or in 5, 7 years, they will cut probably more jobs than they would cut consolidating with us. Because they have to get there. They have to get there. They cannot, we cannot, no one can survive in banking with a 57% cost-income ratio in Germany when your competitors are below 40, or if they are fintechs, they are below 30. Because you will either be too expensive and make the client pay for your inefficiency, or you will be disintermediated. And so that is a must. It's not me determining it. And I think what is important in the efficiency is to do them in the right place. If I may, the industry, mostly driven by consultant, every time that they have had to do cost cut, has cut the network, has cut the service to the client, has cut that, and has cut investment, because nobody sees what your systems are at the back. Since 21, we've shifted that. We are boosting the network. If you take Italy, we have hired about 1,000 people in the network. while our costs have declined about $1.4 billion. So we are making the entire chain and the head office leaner. And I can tell you, spending a lot of time with our people in the branches, they really welcome the fact that they don't need to carry bureaucracy on them, that in their opinion doesn't add value, but creates a lot of bureaucracy in their service with clients. So I do think that, forgetting the merger for a second, all the banking sector will have to continuously improve the efficiency. The question is, are you doing it the right way? Is it sustainable? Are you treating your employee correctly? Are you potentially exiting more older people that are close to pension that want to exit and hiring young people? Because if you don't exit, you're not hiring either. So I do think it's a complicated issue. If you look at Unicredit, and in spite of what we have done in the last 5 years, which is a lot of efficiency, we've never had one debate with Workers' Council of trade union that we didn't resolve.
We talked about the reaction from Berlin. How disappointed are you about the reaction from Commerzbank management?
Well, I think with Commerzbank management, we have a very constructive relationship as an investor.
That's what they say as well.
We meet every quarter. We ask the question that every investor would ask. We get the answers. On some things we agree, on some things we don't agree. And at the end of the day, we're very, very aligned.
But what do you expect them to do, to sit down and talk about the deal?
Well, if there is an interest to explore the deals, and in my opinion, there should always be.
Because apparently there's not, because we asked Bettina Orloff yesterday as well what she would have answered if there will be a deal finally or not. Yes. 78% here said yes, and she said she would have said no.
Look, I think I'm not going to answer for what Commerzbank management and supervisory board are thinking. What I would say is what I would do, which is very different, obviously, if I was in that position. At minimum, I would sit down confidentially and see what is on the table before criticizing it.
Let's talk about
at the moment, there isn't that, and we stay where we are, and we're happy with it.
Great. Let's talk about what's on the table. First, the share price of Commerzbank has, first of all, your share price has done pretty well. Actually, do you need this deal to continue the trajectory?
Look, as I was saying, yes, our share price has gone up 9-fold since 21. So I think when this management team started, we were €7.48. As you can see, we track it. And we almost reached 70. So we have done pretty well. And everybody looks at share price. But share price over 4 or 5 years does not do that if you don't transform. So if you look at our valuation, which is the important element, our valuation is usually at the sector or lower than the sector, meaning that the market is giving us the same valuation as everybody else, but based on our performance. What is important in that, and what are lessons learned? When you start a transformation, the first 4 or 5 quarters, they are quick wins. They're mostly financials. You tighten here, you don't spend there, you reorient people, there is more momentum. But if you want to keep it over, as we have done, we have 17 successive quarters of improvement of performance. Successive quarters of improvement of performance. How do you do that? You need to change the bank. You need to truly transform. And by the way, whatever management team is going to tell you, the proof of the pudding is, are your earnings tracking and going above and beyond your competitors, comparable competitors over time? So, for us, we have done what we have done, we've unlocked in the first 4 years, and that was mostly about efficiency. In the next 4 years, it's mostly about growth and acceleration. The first 2 quarters have demonstrated we can, and the ambition is to take our net profit to well over 11 billion by 27. We closed last year at 9.3. But the underlying growth is significantly greater because in that trajectory, we are eliminating 500 million of contribution from Russia.
So do you need the Commerzbank deal for that?
Absolutely not. Which is why same thing happens in Italy. We think we have an exciting underlying. We also think that if your underlying performance is not good, M&A is a bad idea. And therefore, that's the most important. What is true is that the right M&A at the right terms at the right time gets you to accelerate much more. But the right M&A at the right terms at the right time. So in Italy, where we had something on the table, it was the right M&A, it wasn't the right terms, it was the right time, we moved on. We moved on, our share price actually went up, showing that the market sees that we can do alone a lot more than we could have done with a deal that was probably not ripe to be done. What would
the government or the Commerzbank management have to put on the table for you to walk away from the takeover? Would buying Commerzbank's Polish subsidiary mBank be a compromise?
Look, I think the question is not that, because your question leads to think that there is a pressure to do something at the moment. Honestly, there isn't any. We have our stake. We like the price to go up. We want it to continue to go up. And to go up, we want Commerzbank to continue transforming. We think there needs to be an acceleration of that, because the first 2 quarters are not enough to point to a trajectory. And that is it. Therefore, we are not pressing. So far, we've demonstrated we're not in disagreement. We have not voted our shares.
So you want the share price to go up? You want the share price of Commerzbank to go up?
I want the share price of Commerzbank. Put it in another way. I want the performance of Commerzbank. I think Commerzbank has amazing performance.
Because things would get more expensive for you in the end.
No, it's like, look, it's like if you were to buy an apartment here in Frankfurt. What do you prepare to buy? An apartment that is worth 500,000 euros price, but when you look at it relative to other, you say, no, it's not worth more than 350. Or an apartment that is worth 750,000 euros, but you say, oh, wow, it's worth 1 million. Which one do you buy?
I put it another way. Do you think the stock, the Commerzbank stock, is fairly well valued now?
I think the Commerzbank stock, when we bought, was about 25% discount to the reference market. Today, on 25 numbers, 40% premium. On 26 numbers, 25% premium. So what is it telling you? It is telling you that the price builds an expectation of significant better performance, but not alone the performance of the plan, more than the plan in the next 3 years. So for us, we want the price to go up because we want that performance to exceed the plan, transform, and go further.
So it's still too expensive for Unicredit to consider a takeover at this point?
I think at the moment, and you see it also, every research analyst was on a buy on Commerzbank. Now a lot of them are neutral to sell. And it's not because Commerzbank is bad. Commerzbank is not bad. But it is because at the moment, the price is in excess of valuation. That does not mean every bank has that at some point. So we need to see the next 4, 8, 12 quarters to know where we need to get going.
Okay, so but that's a clear, not at the moment.
Not at the moment.
Okay, I have 2 important questions to that field. Back in June, you said that holding just under 30% of Commerzbank should come with more rights and more influence, and that you would insist on that. What exactly does that mean?
Well, that means that for the time being, so firstly, a fact. We have spent billions to buy a participation of 30% in Commerzbank, and that, like any other shareholder, brings rights.
Exactly.
1%, 30%, 20%, it brings rights.
But how does it look like?
Those rights...
You're not aiming for a board seat for now.
So those rights for an institutional investors are always the same. If the bank's management does well, if the institution does well, you're happy, you stay behind, there's nothing. If there is trouble, then it is time where not only us, every investor in Commerzbank will try to look at us and not themselves on what do we do to change things. But I don't anticipate things to go wrong. So for the time being, we are where we are.
So if things go badly, you reconsider?
If there
the board seat question.
My shareholder would ask me to reconsider because we have a lot of money invested.
What would mean things go badly? Like performance is not going up?
Performance-wise. Other issues. And by the way, performance can also not go well for nobody's fault. But if there is a consistent underperformance, I think a lot of investors, not only us, would want to understand how it can be made better. At that point, there is more vocal input on what should be done.
Bettina Orlopp said yesterday that she's against you taking a board seat because that would create conflicts of interest. Would you agree?
I don't, and this is yet another distraction like headquarters, cost, client, all things that we have not discussed. Why don't I agree? Firstly, because from a regulation and a legal standpoint, particularly in Germany, if you go on a board and you take decision against the best interest of the institution, you have personal liability. And I know very well about that because I am on a German board. Number two, their example, if you take Crédit Agricole in Italy with BPM, they have 20%, and when they had 10, they had representative on the board, they have two banks side by side. So there are a lot of check and balances, and when these board seats are taken, it's not like an executive of the bank goes there. It is that usually a very well-regarded independent individual is named by that shareholder because that shareholder thinks it will influence the direction in the best interest of the bank. So I don't think that that's an issue. Having said that, we don't want any at the moment.
So we started with Europe, we will end with Europe. You obviously have many conversations also with Brussels. What is your impression? Are other topics like banking union and capital markets union gaining traction now? Is the discussion moving in the right direction now? When Germany seems to be supporting the ideas, Macron seems to support these ideas.
Let's look at the positives. Okay, the positives is I've done banks and I've covered banks for 40 years almost. The dialogue, the discussion, the debates around banking union and capital market union in the EU have never been so frequent and so much discussed, and there has never been so much interaction between policymaker and the banks to understand what is it that is broken. So that's a very big positive, because before it was talked about, but nothing was doing anything about it. Now it is there. Secondly, and we said it before, when we have indication that single countries are actually pushing back on banking union or on the rules of convergence of the EU for banks that exist already, the European Union is taking a very firm stance and debating it. Positive. Thirdly, I do think, but this is my opinion now, that European governments are going to realize that if we want to transform Europe to the extent that we want to transform it, if we want to build defense as we need to build it, infrastructure, we talked coming in here, trains, balance sheet of governments are not enough. And by the way, balance sheet of government usually end up in the taxpayer pocket. You need to leverage that. To leverage that, you need larger banks and capital market. We want those 40% savings of Europeans to go in productive investment, not in bank deposit. And to do that, you need capital market and bigger banks. So because of that, and because of the imperative we have now, with war at our borders, with the US taking a position that is much more detached, I honestly cannot see how we're going to get out of this without converging. And I'll leave you with one last thought. When I arrived at Unicredit, the first thing I did for the last 9 months is to listen to everybody. I have 13 countries. The first 15 minutes of every conversation with every CEO of every country was how different they were from everybody else, and what worked in their country did not work anywhere else. Unicredit had 17 billion in market cap, and our stock price was at 748. Today, if you asked all the CEOs, they will say they're much more empowered than before. But we have one strategy, one vision, and we have put the common denominator things that don't define us, but we can leverage. Technology, AI, factories, procurement, etc., to achieve what we have to achieve. For Europe, and look at that, our share price is almost 70 and our market cap is above 100 billion. So if I can make a parallel that is a lot more complex for Europe, Europeans are all different. And I laugh when they say, oh, he's Italian and I'm German. I'm not Italian, I'm from Rome. And I live in Milan. And the Romans say, but the best thing about Milan is the train back to Rome. So the point is, we Europeans cannot be more fragmented and cannot be more proud of where we come from. We're never going to change that. But I think to defend that and not to destroy the opportunities for the younger generation, we need to learn that some things, honestly, and maybe it's debatable in many circles, I don't see how every country or subset region of a country should have their own army. That adds to my independence. Actually, I want an army that is capable to fight common threats of the European Union. The same with energy, the same with banks. So my personal view is we are going to be more independent and more happy to debate with each other why Rome is better than Milan or of Palermo or of Munich if we know that our region is thriving than if we continue to say, no, I'm going to close it and close it and close it, because then other people from outside the Union are going to impose on us principle, value, and behaviors. And that is why I think Europe needs to stop.
What is better in Germany, Munich or Frankfurt?
I'm never going to take that decision. But they have a lot of a good event in Munich, and Frankfurt has the ECB here. So
and Bankengipfel. So also, you talked about the time you started at Unicredit. You are now 62?
I'm now 62, yes.
How long do you want to stay CEO of Unicredit?
Well, first of all, it's a great question, because if my wife was here, she would say as long as possible, because having you at home would be horrible. But
is that so? Okay.
Just because I'm hyperactive as a person. No, but now seriously, I ended up at Unicredit probably in a weird way, but they have totally won my heart. I am hyper excited of what we're achieving. The management team, not only the management team, when I go through the network, the branches, I go through the countries, they want to get there where we want to arrive, and I have a duty to take them there. So as long as
so that sounds like another 10 years.
As long as shareholder will want me, I will stay. So my personal meter is I will put my candidacy forward for as long as I add value and is the best, and I think is the best for Unicredit. The moment the shareholders, the employees, other people will say, you've done great, but now we need a change. I will walk, but I want to walk looking back and saying, I left a great bank behind it.
Andrea Orcel, thank you so much for taking the time.
Thank you.
Thank you.
Thank you. Thank you.